This has helped us identify where the lows have come in and the critical breakout points in the market. I want to share that with you in today's video so we can understand how this third and final reaccumulation zone for Bitcoin has begun, how it's going to play out, and what happens next for cryptocurrencies. Let's dive straight into it, hitting that like and subscribe button. It's your home of macro cycle analysis across traditional finance, real estate, and of course, Bitcoin and cryptos. And I'll mention this a little later in the video, but we have our Black Friday special coming up. So link for that is in the top of the video description. More on that later. Let's start with traditional finances. We unpack our signals, our indicators to identify what's been happening in the macro market so that we can be sure, or at least more certain, about what we could expect with Bitcoin coming up over the next few months. So for the traditional markets, the lows have been set. We've got the cycle low of the bear market of 2022 in, and the market has been climbing away from that. Using our Gann swing indicator, you can see that we have macro higher lows after higher low. So we've got a little one in here for which was the US debt ceiling crisis. We just had the most recent low on the market, and then the market has screamed away from that point into November. So this is all important because we need to understand what the traditional finance is doing to see whether there is more risk appetite forming in the market to come through and give us some of that juicy money back into Bitcoin and cryptos, which are more riskier assets, regardless of what anyone is telling us. I mean, the market is telling us that they are more risky, they take more time, and eventually they do pop off if this continues up. So we are seeing this up. We're looking for a new all-time high relatively soon for the stock markets. And essentially, we've broken out of our accumulation range. We've touched that range, nice high closes, and the move is pushing on from there. Nice volume has come through on each of these lows. You can see the lows form here for the S&P 500. Here was your banking crisis, huge volume. Here was October, whatever they put that down to, more huge volume there. COVID low, huge volume. The pullback volume here in September, huge volume. So we're seeing very, very good signals that the lows are forming in these markets. Same deal for the NASDAQ. You can see we've had higher lows form, banking crisis, debt ceiling crisis, whatever the October crisis was. You let me know in the comment section down below, but you can pretty much tell that most have forgotten about each of these crises as the market has unfolded month after month. So that's what we continue to follow up here because the charts are telling us what the market wants to do next. It is telling us there is strength in the market. It's telling us that every time these markets come to a significant, extreme crisis, come on, banking crisis of March 2023 was extreme, big volume, comparatively speaking to what happened over the previous few months, huge volume at the bear market lows of October, basically September and October. Inflation fears, we can see huge volume coming in, relatively speaking. Each time this has happened, the smart money has been buying up, whereby the dumb money has been selling. They've been fearful of further downside. And pro traders and pro investors and analysts, you name it, have been telling us that these markets should have collapsed by this point. But what the money is doing is something different. What the actual money is doing, not what their mouths are doing. So pay very, very particular attention to what's going on in these markets using indicators that work for you. In my case, I'm using the Gann swing indicator. Yes, there is a shout out to that. It's in the video description. It's a custom indicator that we have created here. All right, so with that in mind, we do have the Black Friday sale coming up for TIA Premium. This is our biggest sale of the year. If you're not on board yet, jump onto the email list here. And you'll also get a free email report coming out in the next 24 to 36 hours as well. That comes out every single week. All right, so that's where we sit for the S&P 500 and the NASDAQ. If you haven't been following for several months, the lows are in. It's what we were talking about when it came to the transitional phases of these markets, regardless, weirdly enough, of what the media has been telling us about inflations and money printing or no money printing or interest rate rises or people can't afford things. The market is telling us something absolutely different. And that's what I want to get into for Bitcoin as well. Bitcoin returns have been green this year, 121%. We've got roughly 6-7 weeks to go of the year. I suspect this is going to be a green year. And what we've seen throughout history, barring 2010, which is also a green year, you got 3 green years, 1 red year, 3 green years, 1 red year, 3 green years, 1 red year. Could we be in for a very explosive move after we see a significant level breakout? And I want to share that with you as well. For Bitcoin and then for cryptocurrencies, I don't know if this is always going to play out like that. 3 green, 1 red, 3 green, 1 red. But at least at this stage, and especially because the traditional markets are also in their bull market phase of heading to newer highs, not there yet, but essentially just following what the data on the charts are telling us, then I'm anticipating that the next year or so will also be green for Bitcoin, just based on what we're seeing there. So with that in mind, let's have a move across to Bitcoin and the lows that have formed in Bitcoin. This is what we uncovered during the market cycle bottom on the channel with receipts. You can go back and check out those videos, which is why I suggest you do subscribe to the channel. At the time, we were laughed at, of course. They were saying that the markets were going to go to the next previous tops here at 12K, at 10K. Some were even still calling in September for the market to go down to 3, 8, and 9K. You might know who have been calling for those numbers, yet the market's done the absolute opposite to what these people have been saying. So these were the warning signs that the bear market was coming to an end. Timing, roughly 360 to 400 or so days was the downtrend. The log breakout, that's what this yellow line is here. We got the breakouts. That was another good confirmation. Monthly swing top break. That's why I emphasize so much on the importance of the swing indicator, telling us that there was a big shift happening. You can see there's a monthly breakout from these highs. Market broke out in January after that bottom had come in there for November, and many were still hoping for further downside. But essentially, you can see that the swing kept us on the right side of the market, even though we don't know exactly what the price is going to be. Just got to stay with the trend. That's the big difference here between a beginner and a professional. Beginners want to know, what is the price going to be? Professionals just want to know, am I still in with the trend? When we compare those two options there, we don't need to know that the price is going to hit this exact number because no one knows. That's the problem. But what we can understand is where the trend is. So the next thing I want to have a look at is the breakout of the 50%. You can see the market has hit that, hit it again, and then the explosive move starts from that breakout. So some of you may already know about the 50% level there, and that's essentially one of the big things that we are waiting for the market to take out before we can start that explosive move. And there's only so much time left after that happens. But what we are in is the third and final reaccumulation level underneath that 50% level. So I've broken this one here down into 18 months. You've probably seen this one also come up as well, but it's good to revisit these because essentially for the macro, we just need to see if we're still on track. We're still within the trend of what we've been talking about. So 18 months, that's the 3-year bull market broken in half. Essentially, that divides in time, more importantly than price, divides in time roughly the explosive move to the accumulation. 1, 2, 3 accumulations here, which happened on the border here of the 18 months. You can see 3 different accumulations, or essentially one accumulation. Here's the reaccumulation, and then another reaccumulation before the market started to go pretty nuts. Here's the accumulation. This one's a little trickier. I'm looking at a reaccumulation between these levels here of roughly about 9 to 10K and the lows here at about 6.5 to 7. You had a reaccumulation, pandemic, another bit of a reaccumulation, but then you had the 50% level at around 11,500 with a very small reaccumulation again before the explosive move, correction, another big move as well. So we've got about 6 months left in this 18-month period. You can see in each of the occasions, it did just go a little longer than the 18 months. The 2016 cycle, and then also the 2021 cycle, well, basically the 2021 cycle, which you can see the reaccumulation was happening the year before, which is essentially the year that we're currently in now before we get into that 2024. So we're in that sort of 2019 bordering across into 2020, and like the previous cycle, the end of 2015 into 2016, you had those multiple reaccumulations there, waiting for that zone there. So we've still got a little bit more time there to go. The MVRV, another thing that we have been tracking here on the channel, has shown us that these lows we're in well and truly back here below the $25,000 level. That's pretty much one of the best buying opportunities that Bitcoin has given us over the last 4 or so years, essentially before it broke out in early 2021 or late 2020, anything under that 20K was the zone, and then we got the extra opportunity here under 25K. So a lot of buying was happening under those levels, as we've covered before, looking at some of the volume indicators as well at those lower prices. So that's underneath 25K, number one. Number two, between 25 and 32K. And now number three looks to be between 32 and I'm anticipating roughly 42, because that's the 50% level. Let's bring that up here. You can see that there. There's the 42.2. Now, I want to just have another look at the MVRV here, because you can see as it was climbing out of the green zone, there's really no more opportunities in that green zone that we can see from history, besides a black swan event. So I'm not anticipating black swan events. I think, like I've said before, it's basically a fool's game to hope for a black swan, because essentially it's basically something worldwide that no one has anticipated. Maybe you've got those skills to do it. I sure don't, and I don't want to be banking my investment portfolio on the hopes of a black swan event. So barring a black swan event, anything in this next yellow range was a reasonable area for reaccumulation. So all I've done here is put it at roughly 0.3. The red line in this MVRV down the bottom here is at 1, and then the dotted red line is at 1.5. The dotted red line starts to curve fit the MVRV, so I don't want to get too into the curve fitting of anything down here, but I just want to look at those levels at 0.3 and 1, and then if things got a little bit crazy, keep that there just in case, because we don't have that many data points, and we're just going to have a look at it in the future to see whether things rhymed like the past. So essentially just looking at the market coming out of the yellow, going back to the previous cycle here, got into the red, and after getting into the zone between yellow and red, shot a little further up, came back under. Only the black swan got us back into the green, but essentially underneath that red line and in the yellow were other reaccumulation zones from the previous cycle. Now let's test that on the cycle before that. You can see that it got to the yellow zone, excellent reaccumulation area, broke out, touched the 50% and the reading of 1 here on the MVRV, another reaccumulation, and then the market was basically on for young and old. The breakout happened and things just got absolutely bonkers to the upside. So we're basically in that last little zone here now. Into the yellow, maybe we break into the red over the next couple of months as we hit that 50%. Maybe we don't, just falls short of it. But then we get into that final zone here. We've got the green, you got the yellow, you got the red. All systems go after that point. Lights go off, drivers are gone. Another look at the 3 zones using the monthly swing chart and just the monthly bar chart. You can see where I've got them labeled here. 1, 2, 3, and go time. 1, 2, a little weirder here. 3, go time. It's only just above the monthly swing top. Here it was underneath the swing top and it touched. And then what we're currently in, 1, could almost include this as well. 2, between the 25 and 32, and it seems like we're in this final zone here of 3. Don't forget, we've got that 50% level at roughly 42,000. The white line here is the monthly swing top, which is also a critical level. I don't expect the market to cleanly break through 42 and 48 just based on what we've seen in history. It's tested it really strongly in the last cycle, got a monthly close above the monthly swing top here, the first lower swing top, but it wasn't able to hold and basically gave us that next sort of 12 months to reaccumulate again before we finally got the breakout, the test, and the market's gone. Whereas in the previous cycle, it was much cleaner. You can see that the first lower monthly swing top held the market up for a very, very long time. This was the 50% level as well, rejected. Last opportunity before all systems go, markets started to go bonkers from that point. So we have a couple of levels there, the 42, and now I'm introducing you to that 48K level as well. As we start to edge our way towards that 42, it's really not that far away anymore. After the last several months, we've been watching it and following it and waiting for that 42K to happen. It's about 12-13% away, so not too far to go at this stage. That leads us on to the Wyckoff schematic. So because the markets have essentially done the schematic, we might have to put these to bed for a little while until we get to the peak again. We'll see some run-ups, but essentially what happens in between are these stair-stepping processes that happen in phase E. That's pretty much why the schematic ends at this point. You don't see any more of the schematic here because it happens in smaller or shorter time frames. As the market continues its way to fresh highs, it'll have some distributions, it'll have some accumulations again, and then continue to work its way higher. We probably won't see it in a more macro sense until we get to a cycle peak where you'll start to see a bit of distribution play out. So we have essentially confirmed that the market, or Bitcoin in this case, has broken out and is now in phase E. It had its phase D here, which is right there. You can see the signs of strength happening. It happened twice in this case. Backups, which is the BU, and the last point of supply. That's what these are here. The market essentially testing to see if there's any more demand or there's supply coming in and it's going to be met by that demand. And it did so on this major occasion here, and it did so again on this next major occasion. Pushed it much higher into that phase E, which now we start to swing from overbought to oversold to overbought to oversold. And basically, I think would start to stair step its way up into higher prices. Maybe we get this huge friggin' runoff shoot here like that happened in 2020, 2021, and there's really just no opportunities. That's always a possibility, so we need to be prepared, which is why I'm talking about now the old warnings, the final chances, all that sort of stuff. We'll eventually run out of time on those, and basically the movement just starts to get a little bit quicker and people freak the fuck out and start to jump on board way too quickly here. So pay particular attention to that. I have been very, very bullish through the lows, and yes, I did start through here in June. That doesn't matter now because you can see that that was an excellent buying opportunity. I was very bullish and excited, whereas as we start to transition into the higher prices, now I start to get a little bit more cautious, a little bit more worried that the peak could come at any time, but we do have our timing to pay attention to here as we look out roughly 3 years from the lows. So we're on a weekly chart. 3 years is going to take us to about 150 odd weeks. So we're looking towards that second half of 2025. So with each step closer towards that period, which is just under 2 years away, things start to get a little bit shakier, and we should be more conserved and a little bit more rational in these markets, even though they feel like the opposite. They feel like excitement. They feel like it's party time and all systems go and things are never going to end. That is the time to be a little bit more fearful. The old Warren Buffett saying, be fearful when others are greedy. So that's that greed that starts to creep in, and then greedy when others are fearful. And I think those times, or the best times of those, are ending and will have ended. And essentially we're in that second, third stage of that best times to be getting in before that greed really starts to pick up in 2024. Now, these prices that we've been looking at, the 42K level, like we've seen before, when the market gets to the 50% level, it likes a rejection, and then the halving comes in, and then we get a breakout of the 50% level. Go back to the previous cycle. We have the 50%, so straight through the middle. We're on a log chart, but always use the fib tool on our linear readings here. A hit of 50%, the halving comes in, and then a breakout of that 50% level. Market went bonkers from that point. In terms of timing, after it breaks out, you've got about 12 to 13 months left until that final peak, which is what has happened in the past. Doesn't mean it has to happen exactly again. We'll keep that number in mind, but just be open to it potentially ending earlier or ending later. Like, we just need to keep this in mind because no one knows for sure. You can see again, 13 months when it broke out of the 50% level, finally got a monthly close above that 50% level, nice and strong. 13 months left until that final peak in the market. So you can see once we had the three accumulation areas, these are marked up on the chart here. We are entering our third and final stage by the looks of it. It can take some months. You can see in the past, it's been roughly 3 to 6 months in each of those occasions. Then we have to see how the market responds to the 50% level on the price. And on the last two occasions, when it breaks out of the 50%, it goes bonkers. Now, I wanted to take you back to the S&P 500 because these tools have been used for over 100 years, especially the 50% level. You can see what happens when the markets any market breaks out of the 50% level. You can see that it's gone bonkers here. So draw your eye to the top and the low in the bear market. Market was getting held up by the 50%. It finally broke out of it, bonkers. It got back to it, tested it, went bonkers again to the upside. However, using this tool and backtesting it over 120 odd years from when Gann created it, it shows up time and time again that the 50% level is a must-watch level for breakouts and for retests to see the strength of a market. So that's what we're going to do on the way out here. What happens? We've got the halving coming up, so I suspect we're going to test the 42K level, hold around, and then finally get that breakout. And that's going to be the end of the third and final reaccumulation area. And then we start that crazy move to the upside, which essentially tells us, rings a bell, and says we roughly have about 12 months left, just going on the data from the past. Basically, the facts from the past. Doesn't mean it has to happen exactly the same. So keep this in mind, use them as a roadmap as we lead into that next stage. Don't get too greedy at the end. Start to get a little more fearful when you hear everyone start to talk about, oh, it's finally moving, Bitcoin's going up. It's like, well, yeah, it's up 120%. Let's have a look at how it closes out this year and closes out 2024. That's going to give us a lot of data leading into that final year, which I think might be around 2025. We have to reassess this as more data comes through, but so far it's been working pretty similarly to the previous cycle of 2015, 16 into 2017. Do I think there's going to be a blow off top? Let's wait and see. I'm not banking on anything like that, but of course the charts will tell us whether we do get that or not. Now, just want to do a quick reminder, Black Friday is this week. Link in the top of the video description for our biggest sale of the year on TIA Premium. You also get the free crypto and economic reports that come out once a week. So why not? If you don't like it, you can always unsubscribe at another time. And on that, make sure you do hit the like and subscribe button. Let's see if we can get this thing to 3,000 likes for this video. I'll see you guys at the next video as well. So stay tuned for that one coming up. Big things coming your way. And I'll see you again very, very soon. Till then, take care and peace out.